Thanks so much for joining us in this session. I'm Candice Burke. I'm going to be your first MC, and then Kyle is also going to be your second MC. And this is obviously the Magellan Greenhouse. So a big thanks to Magellan, a major sponsor of FinFest. Hope you guys are having a great festival so far. This session is all about my favourite topic, buy, hold, sell, and we're going to focus on the global side of things. So we've got here the team from Firetrail Investments, Anthony, Eleanor, Eliza, and also we have Kyle, the investment director, and we're going to be hearing their thoughts about some of their favourite stocks, obviously a buy, hold or sell as well. Now disclaimer, I'm just going to get over this really quickly. You guys know the drill. All the information presented today is obviously educational and entertainment purposes only. Any advice is obviously considered general advice and should not be taken into your personal financial circumstances, needs or objective. Before you act on this general advice, you should consider, I swear I haven't had a drink. You should consider if it's relevant for your needs and objectives. Equity Mates Media operates under the Australian Financial Service Licence 540697. Enough of that. I'm going to hand it over to Kyle now, and you guys enjoy the buy, hold, sell.
Okay, thanks so much. This is going to be a lot of fun, guys. I'm excited for you. And I don't think I've had this much fun since I went to Falls Festival in 2006. This is like a real festival. You got music, yeah, woo! We got music, we got games, you got portaloos. It's all basically the same. The only difference is we're doing financial insights, which is something that we love, the team at Firetrail. So you're in for a real treat today. You've got three of Firetrail's investment experts, Anthony Doyle covering global equities, Eleanor Swanson covering Aussie small companies, and you've got Eliza Clark covering Aussie large caps. And so what you're going to get out of today are some of our best ideas, some holds and some sells. So why don't we get into it? But before we do, hands up if you tried the bull today. No one rode the bull? Oh, we got a few in there?
Over there.
There we go over there. Did anyone get past 17 seconds?
Hey.
Oh, you did? Nah, he's lying. So, challenge yourself. I got 17 seconds on the bull. If you beat me on the bull, come and see me, and I'll shout you something. I don't know what yet. Haven't thought about it. I don't want to pay too much. All right, let's get into this. It's going to be a lot of fun. So, I'm going to start with you, Eliza. Oh, we got a lot of sponsors here, guys. Oh, no, hold on. No, we don't.
That's it.
All right.
Oh, they're not sponsors.
All right, here we go. I'm going to start with you, Eliza. We're going to start with sells. We'll finish on a high. Actually, it's going to be you, Swano, because it's Lake Resources
Let's
in small caps.
All right.
What do you got for us to sell?
Okay, so this is actually one of the top 5 performers in the small ordinaries over the last 12 months. So it's up 80%. It's a lithium explorer. They currently have 3 projects over in Argentina. And they're looking to use direct lithium extraction to mine the lithium and get it out of those saltwater deposits over in Argentina. And now there's 3 reasons that we believe Lake Resources is a massive sell. So firstly, their main project over in Argentina is still undergoing a definitive feasibility study. They still haven't completed it. Secondly, direct lithium extraction. There's currently 12 companies around the globe trying to develop this process. No one's been successful yet. To make matters worse, Lake Resources has tied their wagon to only one of these developers, and that is Lilac. So if Lilac can't commercialise the process, they're basically dusted. Now, if we think blue sky scenario, they actually are successful with their feasibility study. Somehow Lilac does manage to get this extraction process up and running. Lake still has to build a $1 billion extraction facility in a very remote region of the Andes. And maybe they'll get lithium, actually start producing lithium in 2024. So this company has no revenue, it's highly speculative, and it currently has a $1.4 billion market cap. In addition, they've got a track record of over-promising and under-delivering. So that definitive feasibility study they first promised us back in 2019, they've just pushed it back another 12 months. So if they get it done in time, it's 3 years late. And in addition, they told us that they'd start building this direct lithium extraction facility back in 2020. We still actually don't know if the process works. The final thing, the CEO resigned in June of this year, and he sold every single share he owned and banked $12 million. Massive red flag. Lake Resources is a sell.
Okay, sounds like more of a money drain than a lake. Thank you, Swano. Yeah, I'm going to keep giving you all these all day. I'm going to add value here. Okay, Eliza, your sell.
Yeah, okay, I'm going to get real personal real quick with you all. I bought a lot in lockdown. I had a lot of free time to go shopping, but I wasn't alone. A lot of us Aussies bought a lot from our Aussie retailers and we saw their share prices run up as well. And we don't think that's going to continue. So my sell for you is the drinks and hospitality business Endeavour Group. So some of you might know they spun out of Woolies last year. So on the drink side, they've got brands like BWS, Dan Murphy's, and then hospitality is their pokies and gaming business. Now I'm going to start off on the drink side. Dan Murphy's, it's a pretty good business, I should say, but that doesn't mean that it's a good investment. It's all about the price that you pay for us, and it's pretty pricey right now, 23, 24 times. And we see some revenue headwinds as well. So on the drink side, there's some structural issues with alcohol consumption. Can you believe it? Yeah, with all our Fitspo and health conscious, people are choosing to drink like low alcohol, no alcohol, so that's going to impact Endeavour. The big R word gets thrown around a lot, the recession. If those conditions impact consumers, they tend to trade down in their drinks, so they'll buy the cheaper option, which will impact Endeavour's margins. And then the final piece is on the drink side. We did buy a lot of drinks in lockdown. Some of us, Doyle and Kyle, I know you guys stocked up. We're pretty oversupplied at home, so Endeavour actually are seeing their volumes go backwards. If we look at what's going on the hospitality side, the big issue there is the regulatory risk. So I'm sure you've all heard in the news what's going on with Crown and the Star. If we see more regulation in that space, it means for Endeavour less revenue, more costs. The final piece of the Endeavour pie, if you will, is their shareholder list. So right now they've got Woolies are a 15% holder still, and the Matheson family, they're also a 15% holder of Endeavour stock. We don't know what their plans are, but if either one of them choose to sell down, it's like $2 billion worth of stock that's going to put more pressure on the share price. So I've got no good news for you on Endeavour. Let's sell it.
Well, and I'm off the booze now, Eliza, so that's like a 5% downgrade to
more
Endeavour
volumes
there.
backwards, yeah.
And I mean, at Firetrail, you know, we do believe every company has a price, and the price you pay for an asset is actually reflects the risk that you're taking in that asset. If you overpay for an asset like Endeavour and it downgrades on earnings, then there's a lot of risk that share price will fall materially. So definitely got to look out for that. Okay, Anthony Doyle, Doyley we call him at work.
Yep.
What's your sell?
Wow, it's a black
How
screen.
good did that logo come up?
Isn't that good?
There we go.
Can you guys see what that says? It says Peloton. So, is everyone aware of this company?
I've got the app.
Have you?
Can't you tell?
Oh, of course. Have you all passed the store in Martin Place lately? Hasn't it been packed? So, Peloton's one of those classic COVID winner stocks where obviously we were forced into lockdown. There was no more going to the gym or socialising to work out. And there was a subsequent uplift in sales, as you would expect. And company management bought the hype. They were drinking their own Kool-Aid. And they said, this is structural, this is going to happen forever. And they invested very, very heavily in expansion plans and growing their business. That's why you've got that prime retail site in Martin Place, which is absolutely empty at the moment. So exercise bikes with iPads, what a business model. Obviously there's a lot of competition out there, particularly when the world opens up again and you can actually go for a bike ride out past your 5K lockdown, or if you want to go to the gym, socialise with your friends, of course, that all came back into play. So there's a famous saying in markets, the stock price is down 90%. That doesn't mean it can't go down another 90%. So currently trading around $9, Peloton. But apart from those structural factors that didn't come to play and the cyclical element of the economy reopening and people spending a lot less time on their Peloton bikes, not Kyle, Kyle's still on there a lot, but everyone else. What we're entering now is an environment where the cost of capital is much higher than it has been over the last few years. Interest rates are rising off those record lows, and unprofitable companies like a Peloton are finding it much more difficult to raise capital. And if they do, whether it's in the equity market or the bond market, they have to pay up for that capital. So Peloton, massive sell for us, a really challenging operating environment and a really challenging capital raising environment for them.
And I've got a Peloton fun fact for you, Doyley. We were talking about this in the office the other day. The Peloton CEO had a margin loan up against his shares, and so he had to sell a whole bunch of stock, and the shares have obviously come off a lot. So his net worth, and you know it's tough for him, has gone from $1.5 billion down to $100 million. So he's doing it tough.
How will he?
100 mil.
Keep the lights on.
I know. Yeah. What's he going to do? What's he going to do? All right. So I got my order mixed up before. So next up, we're going to do the holds, and I'm going to cheat and go, oh, it's Swano. Right. Eleanor, what's your hold?
Okay, so this might seem like a strange company to pitch as a hold, given everybody's getting very nervous about the macro. We've just seen 250 basis point rate rises by the RBA. So pitching a media company might seem strange as a hold. Your immediate reaction is, God, we've got to get out of this thing. But actually, O-Media is looking very cheap. We're seeing 50% upside if you're willing to hold and hold it for medium term, 2 to 3 years, assuming they get back to more mid-cycle earnings. So O-Media, outdoor advertising company, you might have seen them on billboards and retail advertising signs in malls. So the reason we think O-Media is a comfortable hold here, they were actually a massive COVID sufferer, I guess. All their audiences were locked up in homes, their outdoor media, there were no eyeballs on their signs, so no one wanted to advertise on their billboards. And as a result, outdoor media spend in Australia, it's usually 7% of total ad spend. That dropped to 5%, at its worst it got down to 3%. And we're still seeing that share recover. So as we see audiences come back to airports, audiences come back to offices as well, and we are starting to see that 7%, we're getting back up to 7%, which is offsetting any major declines we're seeing in the advertising market. So that's one reason we think it's still a hold. Second reason is it's a structural growth story. So it's one of the only traditional media sectors that actually is seeing audience increases. Audiences increase roughly in line with population growth. In contrast, if we think about TV, if we think about radio, I mean, they're just bleeding audiences to Netflix and Spotify. So if you do want to do a big bang brand campaign, you don't have many options with other providers having shrinking audiences. Industry insiders expect outdoor media to get to 10% of total ad spend in Australia. So you've got that structural growth there. Then finally, if we are to see a really bad macro cycle, O-Media's got a very clean balance sheet. So their gearing's at less than 0.5 times, and they're actually undertaking a buyback, which tells you that management has very high level of confidence in the future. They're buying back their own stock. So we think O-Media is a comfortable hold if you're willing to look through the cycle.
It's an interesting one as well, isn't it? Because it's one of those ones where you've had traditional billboards where you used to have to paint them and put them up like that, and now you've got digital billboards, which almost expands the opportunity set, means they can get some smaller customers as well. So
Absolutely.
Operating in a bigger pool there. All right, next up we have you, Eliza, for your hold.
Alrighty, so my hold is Aussie banks, and our pick in the space is ANZ, and I'm sure a lot of our investors out there have got some banks in the portfolio. I'm guessing, anyone? Yep, there we go. We think the interest rates rising is good for banks, just as long as they're not rising too quickly. So if we break down what banks do, on one side you've got the mortgages, so I'm sure a lot of us know they charge us for our home loans and they make money on that side. On the other side, they've got their deposits, which fund the mortgages, and they pay out interest to the deposit holders. And so a bank makes money, or their margin, on the difference between what they're paying out on the deposits versus what they charge on the mortgages. And we, along with the market, see earnings upside over the next 6 to 12 months. That's pretty consensus view. If you do hold those banks, hold on, because we do see some short-term upside. Not very exciting, but we do see it there, so hold on if you're in. But if you are considering adding a new bank into the portfolio, there's a couple of things we would point out to note. So first one is banks employ a lot of people. Wages is a big part of their cost base, and we're seeing wage cost pressure. So recently NAB tried to put through a wage rise for some of their employees, a 5% wage rise, and it got rejected because it wasn't good enough. So, we're expecting to see 5 to 7% wage rises there, which is not good news for the banks. Second reason is interest rates are rising quickly. We know that. And if they keep rising as quickly, we're going to see the borrowers under pressure and maybe have trouble with their loans. You might see some bad debts, which then is going to cost the banks over the medium term. So, once again, if you've got banks, hold on. Our pick in the space is ANZ, but looking out, we don't really see much upside for them. A couple of headwinds on the horizon. Yeah, bit of a vanilla ice cream pick, I think. I can't get too excited about banks. I don't know.
No, I need sprinkles on my ice cream. Banks don't do it for me, but yeah, obviously they've got a few key tailwinds coming through. All right, Anthony, what have you got for us for your whole? Oh, here we go. This is controversial.
What do you think?
Any Tesla fans out here?
Who's excited?
Here we go. Who drives a Tesla? Oh, you're putting up your hand. Oh, no.
Who's excited? So who thinks it's a
No
buy?
Tesla drivers.
Anyone think Tesla's a buy? Hold? Or a sell?
I reckon it's a sell.
A lot of bears out there. Wow, okay. So we did the deep dive research on this very recently, and the research was actually presented to our investment committee last week. Eleanor knows 200 hours of research into a company, meeting with company management, meeting with competitors, meeting with suppliers, deep dive research to truly understand what these businesses are. So do you guys know what Tesla is? Do you know what sort of company it is? Yeah, it makes electric vehicles, cars. Yeah, okay. Tough crowd. Can we get some of those margaritas, please? Maybe coffees as well. Yeah, and we've got a lot of respect for Tesla. Fantastic company. There's a reason why it's done as well as it has. And obviously, the largest manufacturer of EVs today, leads in automation and on the tech side of things as well. So fantastic company. Trading, it's derated a lot. Currently trading on 40 times PE. And looking forward, again, getting back to what Firetrail is all about, what are the 2 or 3 things that truly matter for Tesla? So when we're looking at Tesla, in terms of its current valuation, on a 10-year looking basis, they currently sell 1 million vehicles per year. To justify the current valuation, they need to sell 10 million vehicles within the next 6 years by 2030. And that's in an environment where there's increasing competition. So obviously you've got companies like Volkswagen. Volkswagen trades on a 4 times PE, but many of the traditional ICE auto manufacturers are also competing in the EV space, as I'm sure you've all seen more and more EV options coming to the Australian market. But also in terms of the technology within an EV, the traditional ICE vehicle is around 20,000 parts. In an EV, there's about 200. And just like in your iPhones, you probably don't know where the batteries come from. Similar to an EV, a lot of the battery technology and manufacture comes from China. And one of the main competitors for Tesla going forward will be BYD. Indeed, there's rumors that Tesla is getting their battery technology from BYD. BYD are manufacturing it for them. So we think that there's a trend that consumers won't necessarily say, oh, that's a German-made vehicle, German quality. Actually, in EVs, most of the underlying technology is coming from China in that battery technology. And often, it's a cheaper option, which is obviously important when you're going into an environment where the consumer is going to come under pressure because of higher interest rates, higher mortgages. So Tesla for us, if you don't own it today, don't buy it. If you do own it, hold on to it.
There we go. Only need 1,000% increase in their production capacity and we're going to get there. Okay, next. This is the exciting part, guys. You're going to get the buys from the Firetrail team, our highest conviction positions. Well, so I know you presented your highest conviction position before, but I'm looking forward to what you've got here.
Portfolio
Yeah, that's right. So, Swano, I'm pretty sure you're up first. What do we got?
Yes, so I gave my favourite growth stock at the stock pitch. This is my favourite value stock, so Estia Health. Pretty relatable for anyone that has elderly relative. They operate aged care homes across Australia. They've currently got 6,200 beds across the country. Now there's 3 things we like about Estia, and one is that it's a sector that really needs government support. So there's currently 220,000 beds across Australia in aged care at the moment. Now that needs to get to 560,000 beds by 2050 if we are to support the ageing population in Australia. So people over the age of 85 in Australia growing at about a 4% CAGR over the next 20 years, and that's relative to the rest of the population growing at less than 1.5%. So yeah, we've got a bit of a problem coming. Building those extra beds, about 3x the number of beds we have at the moment, would cost about $100 billion. So the government really needs to make sure that the sector is incentivised to deploy capital. And to deploy capital, you need to have profits. So the government needs to make sure that they've got the right funding structure in place for the sector. They don't at the moment. 50% of the sector is unprofitable. So we're expecting under a Labor government to really see some funding changes coming through and the profitability of the sector to improve. So it's one of our favourite positions at the moment. The second reason we think Estia is a buy is that it was heavily hit during COVID. So we saw occupancy in aged care homes trough actually really recently. So in February they troughed at about 90%. Now for every 1% increase in occupancy above 90%, it's about a $5 million incremental earnings for Estia. So if we assume they can get back to 94% occupancy, which is what they did pre-COVID, that's an additional $20 million of earnings they get back there. So you've got a really nice recovery story playing out, and that's regardless of the macro. You know, if you need to go into an aged care home, you're not going to go because the macro is weak. It's a very defensive sector, so we like that earnings recovery story. And finally, valuation. So Estia actually owns 90% of their properties outright, and currently the market value of Estia, 70% of that market value sits in the land value of those properties they own. So you've really got a floor under the share price, which is great in these volatile markets. Secondly, what we're seeing in terms of build costs for aged care homes at the moment, it costs about $400,000 to build an aged care bed. Estia's current value is implying it's trading at $265,000 per bed. So it's trading 33% below replacement costs. So it's incredibly cheap. The valuation's super compelling. It's got an earnings recovery story and a government that's very supportive of the sector. It's a screaming buy.
Yeah, it's, as you know, Swano, one of my favourite stocks in your portfolio. And who would have thought aged care would be exciting? But there we go, nice and defensive going into a challenging period potentially. All right, who have we got next? We have Eliza. Eliza, what's your large cap Aussie equities buy?
Alrighty, I'm not going to labour on about the economy. We've got Doyley for that, our resident economist, if you want to hear more. But in these more challenging environments, we recommend investors park some money in those defensive businesses, as Swano went through. If you know, it doesn't matter what the economy is doing, recession, boom, something like healthcare is a defensive type of business, so I'm going that way again, and I've gone with ResMed. Now, I'd love our audience to get involved here with me, so can I please get a show of hands if you're a snorer? Thank you, Kyle. Oh, there's not many of us. Oh, come on. Do you know someone who's a snorer? We're all honest in this. Is this all a
50,
safe space
50,
here?
50,
Okay.
Yeah, if I didn't put my hand up, my wife would watch this afterwards and go, liar!
Yeah, so there is quite a few of us. Maybe some of us are a bit nervous about it, but one of the leading indicators of sleep apnea is actually snoring. And so ResMed is the number one device maker of devices for sleep apnea. And we really like it for two key reasons. So the first one is their addressable market opportunity. So there's a big market out there. Believe it or not, over 25% of Americans have sleep apnea, and we're only seeing the condition increase with the aging population, the obesity rate. So there's a really big market out there for them. The second reason we like ResMed is because of their potential to take market share. Now, their key competitor, Philips, I don't know if you guys have seen the press, they've had a lot of issues recently. They've had to recall over 5 million of their devices due to product safety issues. And they cannot sell a new device to these patients until they've repaired or replaced all of these 5 million devices. So that's a massive task for them that we're expecting them to get through maybe first half of next year, still getting details around that. Why is this so exciting for ResMed? Well, Philips had 35% market share. So they're out of the market now, they're zero. ResMed, is in a really good position to take some of this market share from Philips. Now, I know what you're all thinking. what happens when Philips comes back. We're realists. We know Philips is going to come back into the market, and this is the key reason we think the market is underappreciating the growth story with ResMed. So right now we've got a massive patient backlog. There's heaps of patients who haven't been able to get their devices, whether it's chip issues or supply chain issues. There's a massive patient backlog. And then once these patients can get their devices, there's patients who've had 7, 8-year-old devices, they're going to need new devices. So we really see a multi-year growth story for ResMed, which we don't think the market is appreciating. So it's a strong buy for us.
Yeah, no, if I think back to similar examples like a Cochlear 10 years ago, you saw what happened when they had issues with their devices and they lost market share for 3 or 4 years. So this could actually be a multi-year penetration story as well, taking share. Doyley, we've had 2 really good healthcare stocks. Are you going to buck the trend? What do you got as your buy?
I am. So, who knows what this company does? Will we give a prize? Any guesses?
What's the prize? I know it.
A free hat is what you're going to get over at the
couple of
stand. But please, come and visit us at the stand if you want a hat.
There we
anyway.
go. Oh,
Close.
you're close.
Very close. You've got minerals
Yes,
in
was
there,
commodity
so
trader.
it's good. First Quantum is a Canadian-listed copper miner. So our fund, the S3 Global Opportunities Fund, is a sustainable global equity fund. Typically, it is very rare that you'll ever find a mining company in a sustainable fund because of the high level of carbon emissions. Mining companies are typically screened out of all sustainable global equity funds. Now, we take a very different approach, and we acknowledge that if the world is to meet its decarbonisation ambitions for 2050, or even in a shorter time horizon, it simply will not occur without copper. It doesn't happen if you want to decarbonise the world. You can't start your EV without copper. You need the copper ring. You can't charge your EV without copper. You can't store energy without copper. So for us, taking a more pragmatic approach to sustainability, we see that there are structural growth drivers behind this commodity, copper. So how do we get exposure to it? Well, we look for the very best copper miner that aligns with our S3 characteristics, our sustainable characteristics, and that just so happens to be First Quantum. Within the next 3 years, they have committed to running their operations 50% on renewable energy. And of course, in terms of being one of the leading copper miners in the world and copper producers in the world, they have very high quality, long life assets in both Panama and Zambia. So First Quantum for us plays into that decarbonisation theme. The key thing that matters is the copper price, and it's a very, very long lead time to try and bring on any sort of copper capacity into the copper market globally. So whilst we're seeing a cyclical downturn as a result of global economic growth concerns, we think the copper price remains structurally high. That's going to benefit First Quantum. Our upside there is 55% over the next 5 years.
Awesome. So I hope you've gotten a really good flavour for how we invest at Firetrail. It's all about deep dive, fundamental research, doing the work. We've given you a few examples of stocks that we like, but we build concentrated portfolios of our best ideas, but we also diversify those portfolios. So I know we've spoken about a lot of individual stocks here today. These stocks are part of portfolios that are typically 25 stocks in each portfolio. And so I don't want you to go away and go, oh yeah, I'm going to go and put all my money into that. These are just some of our best ideas that we've got here. But I've got to say, I've had a lot of fun at this festival. I love everything we've got here, the music, the food, the booze, and most importantly, the financial insights. It's a nerd's best. I was trying to think of something Paradise, yeah. I was going to say something inappropriate. Then I had to stop myself. Thank you. So thanks so much. If you've liked what you've heard from the Firetrail team and you want to learn more about Firetrail and our high conviction investment capabilities, visit the website www.firetrail.com. All of us are available on LinkedIn as well. We'd love to connect with you. And thanks so much for giving us your time to listen to the Firetrail team and our best ideas.
Thanks, guys. That was awesome. So I guess to summarize your longs, right? Go healthcare in this environment and new energy. Love it. I've actually just put in for the Tesla Y model and they updated me saying it's going to be another 9 months. So I love your hold idea.
Already lagging on production.
Exactly. So that was super insightful. Now, as Kyle mentioned, you can obviously jump on the website.
Easy, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.